IG, what's going on? Matt Garland, NMLS number 58700, better known as MG the Mortgage Guy. We are live, we are blessed. Thank God for another day. Happy Tuesday. Beautiful springish type day here in New York right now. I'm not going to hold y'all. It feels really good. I just came back from Wakanda. Let me give y'all a little update real quick, and we're going to talk about how to save you $290,000. But real quick, let's do a roll call. For those of you who are watching this live, what city you're buying your real estate in? If you're a real estate professional, what city do you service? Type it in chat. Let's know who we're talking to right now. Right? We up, as always. So look, let's talk about first things on the menu is the $290,000 save. So I just got off a call with a mentee, right? This is segment one of today's live. We're going to make this quick, to the point. A lot of information, all right? We got a lot of Georgias in the comment. Kathy, Texas, Columbus, New York. You're buying in Fayetteville, Georgia. Shout out to lovely Lana. Nashville. I'll be in Nashville June 14th and 15th. More details to follow on that one. Dallas, Fort Worth. I'm coming to Dallas in the April. Northern Jersey, Baltimore, Miami. Okay, we got realtors from Cali. Brooklyn is always in the building. Queens get the money. All right, so let's get this thing started, right? Let's talk about $290,000 saving. I was just on the phone with a mentee. I'm out here on my power walk right now. But I was just on the call with a mentee, and we were talking about exit strategy, right? Everybody type exit strategy in the comments, please. Type exit strategy. So we were speaking about the exit strategy, and in this particular case, my mentee is, getting up there in age, 20 plus years in their career, and they're purchasing a new primary residence and also a couple investment properties right now. But so for this particular property, this primary, I'm gonna give you the numbers on this. So I came up with the blueprint of how they can save 8 to 10 years, because they really want to pay this off in 20-year mortgage. But I convinced them really not to do a 20-year, just make extra principal payments and invest the rest. So on a $750,000 home, right? Let's just say, hypothetically speaking, with today's rates, you qualify for 7% on a 30-year fixed mortgage. Your principal and interest payment will be $4,800. All right? Principal and interest, $4,800. So I'm trying to paint the picture for you guys, right? Now, for you guys to do this formula, only thing you really need is a simple, come on, Cash. Bro, come on, man, leave that alone. A simple buy down calendar, pay off your mortgage calculator, and you can do the same for your mortgage. But I just want to tell you their particular scenario. So the mortgage payment is $4,800 a month. Divide that by 12. Well, the principal and interest payment. I'm not including taxes and insurance. Obviously, tax and insurance is going to make your mortgage payment higher, but the principal and interest is what you got to figure out, and that's where you got to do your math on. So if you do that by 12, that's $400 a month. So I came up with a formula. If we did, and I showed her the numbers, like we do $500 a month, principal payment only. You can't just send the bank money, or you can't just be on the website saying money. You gotta specify that it's to principal only. And if she did that, the mortgage would pay off in 22 years. It would save them $289,000 in interest over that time. Now, obviously, you can accelerate this and pay it off much faster or put more money down. But they can afford to do $500 a month. See, this only works when we're talking about saving interest and beating the interest trap. Because let's face it, a mortgage is an interest trap. If you stay in it for 30 years and you never refinance, you never put down no principal balance, it's a trap. You're going to pay triple for the house. So if you know you're going to be in this house, this is a long-term thing for you, and that's your plan, start making principal adjustments. But here's the thing I also told her to be wary of. When you're doing a pay down or accelerating your principal strategy, you have to take into account current interest rates and what the market is projecting to. Because at some point, you're going to want to refinance and get out the 7% and maybe go to 4 to 5%. So you got to be mindful of how much or when you start doing this pay down strategy, because ultimately, if you pay down aggressively in the first year or two, knowing that you're going to probably refinance in 2 years, all that money that you put in is going to come right back in closing costs, because your refinance is going to, depending on your loan amount and everything like that, your loan amount your closing costs are probably going to be 5-6% of whatever that new loan amount is. So you want to take that into consideration as well. But that was just like the simple math that we did, right? Simple. And it's numbers that she didn't really know. And it just showed her like, okay, here's the plan. And then from there, she can adjust. So we did various different scenarios, $700 a month, $1,000 a month. And obviously, the more you put down on principal, the more interest you're going to save, because you're going to cut that mortgage basically in half, right? So I want everybody on here, when you're home in front of your computer, you got some time, and you're looking at your mortgage statements, really just pull it out and put, especially if it's your primary residence, if you know you're going to be there 10 years or more, especially those of you who have low interest rates, Damn, I should have had some AirPods for this. It's mad loud out here. So especially those of you who got low interest rates, you don't plan on selling that house, play with your numbers. See what your exit strategy is looking like. What's your freedom point, right? Some of you probably want to time that with your retirements, because you don't want to be in your mid-60s, 70 years old worried about your mortgage, unless you got so many investment properties by that time, which I hope and pray that everybody who's watching this live or going to listen to this later on Rants and Gems, I hope that we are all planning for that exit strategy of retirement and just relaxing in your golden years, right? Because that's what we all should be working for. Now, expensive stitch, I agree with you. Ain't no retirement, B. I get it. But life lives. And sometimes you might need to retire. You understand what I'm saying? You might need to retire. So you want to plan for it. Prior preparations prevents piss poor performance. 7 P's. Type 7 P's in chat. Shout out to Booby. Type 7 P's in chat. Okay? You got to have your P's together. Have your P's together. It's very important information I'm giving you right here on Rants and Gems. Very important. So, and all you future homeowners, especially my folks who are in their 20s and 30s, you're journeying off into your real estate endeavors. You might be a little confused, don't know what the hell's going on with the market. Should you rent? Should you buy? Hey, whatever you do, calculate that freedom point, man. You need that exit strategy, baby. You need that exit strategy. It's extremely important. Right, Cash? Extremely important. Okay. What's your thoughts on a reverse mortgage? That's a very good question. All right. So before we move on reverse mortgages, do you guys understand part one of this conversation real quick? Then we'll go on to reverse mortgages real quick. My thoughts are very simple. Every mortgage is a tool. It's a tool to build wealth. You have to use the tools right. And if you are a senior citizen, or know someone who's a senior citizen, and the numbers work for them in their situation, their financial situation, to have a reverse mortgage, then I think they should take it. The reverse mortgage program is not a bad program at all. It has been totally revamped over the past 15 years. Yo, bro, why are you pulling me? Over the past 15 years. So I don't think it's a bad thing, but I think if you are someone who's dealing with a situation like that with a family member, a parent, whatever, you need to just make sure they got their estate plan in place, especially if they got children. Make sure all the siblings are on the same page. I don't think you have to have fear when it comes with a reverse mortgage. But I just think like with anything, you got to have a plan. And that's kind of what we was talking about in the first segment of this, right? Is that exit strategy, that freedom point. You got to use all the tools that's available to make your life easier. Look, let's face it. I've done some reverse mortgages in my time. And let me tell you, these people needed it. They needed it. They really needed the reverse mortgage. And it helped them. So, but I just think with that, it's a sticky situation because you're dealing with someone elder, and depending on their health situation and everything like that, it's a touchy subject. But you just got to make sure you got all your P's together with reverse mortgage. And Maxine looking good. Cash, I'm about to one you and hop in Maxine and go make some runs. All right, so let's get to Atlanta. I just came back from Atlanta, so shout out to Mike. First of all, we had an Investfest meeting. If you check my stories, you'll see. Come on, Cash. A couple stories. We with the Investfest team. We had to do a walkthrough with the AV team, the managers. Like Investfest, man, is one of these events, man. It's just become a cultural phenomenon, and we're committed to making Investfest one of the most educational festivals that's out there. So a lot of changes have been implemented. We listen to our people, right? Damn, Cash, you thirsty, bro? We listen to our people. Yo, you breathing mad hard. And we're making the necessary changes. So if you ain't got your tickets to Investfest, man, make sure you guys go to investfest.com. If you're interested in being a sponsor, fill out the information. Vendor booths are available. Go to investfest.com if you're a vendor. Go vend before it sells out. So I hope to see all you guys there. You know what I mean? Breathing mad hard. Come on, bro. What we doing here? My man thirsty. Go drink your water, man. Come on, bro. Go drink your water right there. You know what's at, man. Dude, mad thirsty, y'all. Mad thirsty. All right. So investfest.com. Got a chance to, I filmed a dope episode with Terica. Shout out to Terica, Lynn Smith. Shout out to David Shands for allowing me to use his studios. We're going to release that probably in the next 2 weeks. Me and Terica got something good coming too for y'all. So stay tuned for that. That's happening in May. Went out to dinner. As you can see, if you go to Kiana Watson page, you'll see her nightcap from her POV of the dinner we had last night. Man. Yeah. So Atlanta was good, man. Shout out to everybody in Wakanda. Had a good time. I wasn't there for a long time, but I was there for a short time and got my business handled. Now I'm back in New York. It's time to get to the grind. Mentees, we got calls coming up in the next 30 minutes. Those of you who are on the calendar today, shout out to you. I'm looking forward to speaking to you today. Looking forward to speaking to you, right? Let's have some dynamic conversations. Let's analyze these deals. Let's get it going, okay? Shout out to all the mentees. This Friday, we got our Elite and Mentee call. Friday, we're going to do 1 o'clock on Friday. So 1 p.m. Eastern Standard Time, we have an Elite and Mentee group call. So make sure you guys tap in with that. Zoom link will go out. I'm going to put the Zoom link out tomorrow. I'm going to send it out a couple times this week. So that way we get a large crowd in there this week. And yeah, so if you're not part of the Academy, make sure you go to mgmortgageacademy.com. Sign up today. elite members only, right? And only sign up if you're serious about buying real estate in the next 12 to 24 months. If you're not serious about buying real estate in the next 12 to 24 months, whether it's a primary residence, an investment property, please don't waste your time. Don't spend your money. This is only for the serious people, right? This is for the real estate professionals, the licensed professionals who want to deepen their knowledge of real estate financing. This is for the home buyers, for the investors, whether you're a newbie, seasoned, whatever it is. This is for you guys, right? So only come into the academy if you're serious. If you're not serious, please don't waste your money, don't waste your time. I only want the chosen few because those are the people that I want to work with, and I want to help them save money on their deals and also close on real estate, whether they work with me directly or indirectly. So let's go. If you want to apply for a loan, go to applywithmg.com. We'd love to help you get pre-approved, refinance, buy investment properties, whatever it is. All right? And subscribe to the YouTube channel. Hit the bell for notifications. I might go live today. I feel good, so we might go. Right? How do I feel about sub-2 financing? Maybe I'll talk about that today on Rants and Gems. Matter of fact, let's talk about sub-2 financing today on Rants and Gems. Thank you for that question. I'm going to screenshot that, and we're going to have a conversation about it. All right? Shout out to Lindsay Smith. So that's all I got for y'all. Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy. Peace.